the key to your new home, understanding home loans. Buying a home is a big step. It can be exciting and a little scary. Most people need help to buy a house. That's where home loans come in. A home loan is like a big loan from a bank or lender. This loan helps you pay for your house. It's important to understand how these loans work. You need to find the right loan for you. Think of a home loan as a partnership. You and the lender work together. You want to buy a house. The lender helps you do that. You promise to pay back the money over time. This agreement is a big responsibility. It's important to make sure you can afford the loan payments. There are many different types of home loans. Each one has its own rules and benefits. Some loans have low interest rates. Some loans have longer repayment terms. It all depends on your specific needs and situation. In this essay, we'll explore the different types of home loans. We'll help you find the one that's right for you. A loan for everyone, exploring your options. Navigating the world of home loans can feel overwhelming. There are many options to consider. It's important to remember you're not alone in this process. Millions of people have successfully purchased homes using these loans. Here's a list of some common types of home loans. Fixed-rate mortgages. These loans have interest rates that stay the same for the life of the loan. Adjustable-rate mortgages, ARMs. These loans have interest rates that can change over time. FHA loans. These loans are insured by the Federal Housing Administration. They are designed to help borrowers with lower credit scores or smaller down payments. VA loans. These loans are guaranteed by the Department of Veterans Affairs. They offer favorable terms to eligible veterans, active duty military personnel, and surviving spouses. USDA loans. These loans are backed by the United States Department of Agriculture. They assist borrowers in rural areas with low to moderate income. Each loan type has its own set of advantages and disadvantages. We will discuss these in detail in the following sections. Remember, your financial situation, credit score, and long-term goals will determine which loan is best for you. Don't be afraid to ask questions and shop around for the best rates and terms. A knowledgeable mortgage lender can guide you through the process and help you make an informed decision. Fixed-rate mortgages. Predictability and peace of mind. Fixed-rate mortgages are the most popular type of home loan. They offer stability and predictability. With a fixed-rate mortgage, your interest rate stays the same for the entire life of the loan. This means your monthly mortgage payment, principal and interest, will also remain constant. This predictability can be very reassuring. You'll always know exactly how much you'll owe each month. This makes budgeting easier. You won't have to worry about your payments suddenly increasing if interest rates go up. Fixed-rate mortgages are a good choice for borrowers who value stability and predictability. If you prefer knowing exactly what your payment will be each month, a fixed-rate mortgage is a good option. Additionally, if you plan to stay in your home for a long time, since the interest rate is locked in, you can benefit from staying in your home for many years, even if interest rates rise. However, it's important to note that fixed-rate mortgages generally have slightly higher starting interest rates compared to adjustable-rate mortgages. Make sure to compare rates and terms from different lenders to find the best deal for you. Adjustable-rate mortgages, navigating fluctuating rates. Unlike fixed-rate mortgages, adjustable-rate mortgages, ARMs, have interest rates that can change over time. These loans typically start with a lower initial interest rate for a set period called the introductory period. After this period, the interest rate can adjust periodically, usually based on market conditions. While the initial lower interest rate of an ARM may seem appealing, it's crucial to understand the risks involved. If interest rates rise, your monthly payments could increase significantly. This can make budgeting difficult and potentially lead to financial strain. ARMs are generally best suited for borrowers who plan to sell their home before the introductory period ends. If you know you'll be moving within a few years, you can take advantage of the lower introductory rate without the risk of rate adjustments. Also, if you expect your income to increase, you might be comfortable with the possibility of higher payments down the line. However, ARMs can be unpredictable and pose a higher risk compared to fixed-rate mortgages. It's essential to carefully consider your financial situation and tolerance for risk before choosing an ARM. FHA loans are a popular choice for first-time homebuyers. These loans are insured by the Federal Housing Administration, or FHA. This means the FHA will reimburse the lender if the borrower defaults on the loan. This insurance allows lenders to offer FHA loans with more lenient requirements compared to conventional loans. One of the biggest advantages of FHA loans is the lower down payment requirement. While conventional loans typically require a down payment of 20%, FHA loans allow down payments as low as 3.5%. This makes homeownership more accessible to borrowers who may not have a lot of cash saved up for a down payment. FHA loans also have more flexible credit score requirements. Borrowers with lower credit scores may still qualify for an FHA loan. This can be a significant advantage for those who have had some credit challenges in the past. However, keep in mind that FHA loans require borrowers to pay mortgage insurance premiums, or MIP. These premiums protect the lender in case of default. While MIP adds to the overall cost of the loan, it allows borrowers with lower down payments and credit scores to achieve their dream of homeownership. VA loans are a valuable benefit for eligible veterans, active duty military personnel, and surviving spouses. These loans are guaranteed by the Department of Veterans Affairs, or VA. This guarantee minimizes the risk for lenders, allowing them to offer VA loans with exceptionally favorable terms. One of the most significant advantages of VA loans is the option for zero down payment. That's right. Eligible borrowers can purchase a home without putting any money down. This makes homeownership attainable for veterans and military families who may have limited savings or are transitioning back to civilian life. VA loans also offer competitive interest rates and do not require private mortgage insurance, or PMI. This can lead to significant savings over the life of the loan. Additionally, the VA sets limits on closing costs, further reducing the upfront expenses for borrowers. To be eligible for a VA loan, borrowers must meet specific service requirements and obtain a certificate of eligibility, or COE, from the VA. The COE verifies the borrower's eligibility for the loan program. VA loans are a powerful tool that can help veterans and military families achieve the dream of homeownership. The combination of zero down payment, competitive rates, and no PMI makes these loans an exceptional benefit for those who have served our country. USDA loans, also known as rural development loans, are designed to support homeownership in rural areas. These loans are backed by the United States Department of Agriculture, or USDA, and offer 100% financing, meaning no down payment is required for eligible borrowers. USDA loans are available to low to moderate income borrowers who meet specific income limits and purchase homes in designated rural areas. These areas are typically located outside major metropolitan cities and towns. The USDA's goal is to promote economic development and improve the quality of life in rural communities. In addition to zero down payment, USDA loans offer competitive interest rates and flexible credit score requirements. Borrowers must also meet certain property standards to ensure the home is safe and sanitary. USDA loans can be an excellent option for those seeking to purchase a home in a rural area and who may not have the savings for a traditional down payment. These loans promote home ownership and contribute to the economic vitality of rural communities across the country. Choosing the right loan, finding the perfect fit. With so many different types of home loans available, choosing the right one can feel overwhelming. But don't worry, by understanding your financial situation, credit history, and long-term goals, you can narrow down your options and find the loan that best meets your needs. Start by asking yourself some key questions. How much can I afford to pay each month? Determine a realistic budget that includes your mortgage payment, property taxes, insurance, and other living expenses. What is my credit score? Your credit score plays a crucial role in determining your loan eligibility and interest rates. Check your credit report and take steps to improve your score if needed. How much money do I have saved for a down payment? Different loan types have varying down payment requirements. How long do I plan to stay in my home? If you anticipate moving in a few years, an adjustable rate mortgage might be suitable. If you plan to stay put for a longer period, a fixed rate mortgage offers stability. Once you've carefully considered these factors, you can start shopping around for the best rates and terms from different lenders. Don't hesitate to ask questions and compare loan offers to find the most favorable terms for your situation. Beyond the basics, other loan options to consider. In addition to the common types of home loans we've discussed, there are several other specialized loan options available to borrowers with unique circumstances. Construction loans. If you're building your dream home from the ground up, a construction loan can provide the financing you need. Rehabilitation loans. These loans are designed for borrowers who are purchasing fixer-uppers and need funds for renovations. Reverse mortgages. Available to homeowners aged 62 and older, reverse mortgages allow you to convert a portion of your home equity into cash. Before making any decisions, it's essential to thoroughly research each loan option, understand the eligibility criteria, and carefully evaluate the associated risks and benefits. Speaking with a qualified mortgage professional can provide valuable insights and guidance. Before you commit, important factors to remember. Securing a home loan is a significant financial commitment. Before signing on the dotted line, it's crucial to understand the terms and conditions of your loan agreement fully. Interest rate. The interest rate determines the cost of borrowing money. Compare rates from different lenders to ensure you're getting a competitive deal. Loan term. The loan term is the length of time you have to repay the loan. Typical loan terms are 15 or 30 years. Closing costs. Closing costs are fees and expenses associated with finalizing the loan and transferring ownership of the property. Mortgage insurance. If you're making a down payment of less than 20%, you'll likely be required to pay for mortgage insurance, which protects the lender in case of default. Remember, knowledge is power when it comes to making informed financial decisions. By taking the time to educate yourself about the intricacies of home loans, you can confidently navigate the home buying process and secure the best possible terms for your situation. Your dream home awaits, taking the next step. Purchasing a home is an exciting milestone, and understanding the various types of home loans available is a crucial step in the process. Whether you're a first-time buyer, a veteran, or seeking to purchase a home in a rural area, there's a loan program designed to meet your needs. Remember, knowledge is power. By investing time in research, comparing loan options, and seeking guidance from qualified professionals, you can confidently embark on your home ownership journey and turn your dream of owning a home into a reality. Best of luck on this exciting adventure.